Good evening. Thanks for joining us on India Business Hour. I'm Shereen Bhan. The headlines we're tracking tonight. General Electric and Hindustan Aeronautics are set to manufacture fighter jet engines in India. Sources say the Biden administration has given permission for GE to co-produce the engines in India. This ahead of Prime Minister Modi's US visit later this month. Final modalities of what's likely to be a multi-billion-dollar deal being worked out. That's an exclusive. India's internet economy is expected to grow sixfold and touch $1 trillion by 2030. That's according to a study by Google, Temasek, Bain & Company. Expects B2C, e-commerce, SaaS and travel online to be the top growth drivers. The Sensex and the Nifty end flat after a late recovery. IT index logged the worst trading day in 2 months after US software company EPAM trims its growth outlook. Foreign investors are showing unprecedented levels of interest in India, says Morgan Stanley's Rhythm Desai. Ukraine accuses Russian forces of blowing up a strategically important dam in Kherson, which supplies water to a nuclear plant and the region of Crimea. Emergency evacuation begins as the war zone faces flooding risk. Russia blames the dam's destruction on Ukrainian shelling. Crisis-hit edtech company Byju files a lawsuit against the lenders of its $1.2 billion Term Loan B in New York, accuses Redwood Capital of predatory tactics, issues a notice to disqualify it as a lender, elects not to make any payments until the case is resolved. The Aditya Birla Group enters the branded jewellery retail business with a new venture called Novel Jewels, announces large format stores across India for an investment of 5,000 crores. This is their third major foray into a new business in the last 2 years. Venture capital firm Sequoia is splitting into 3 entities. The US, China and India business will operate independently. The India and South Asia entity will be rebranded Peak 15 Partners. Plans to complete the separation before March 2024. Apple enters the metaverse, launches a mixed reality headset, marking its first major product launch in 9 years. The $3,500 device will hit stores next year. Apple also launched what it claims to be the world's thinnest 15-inch laptop. The US market regulator sues Coinbase, alleges it was operating as an unregistered exchange and broker. This comes a day after the market regulator sued Binance and its founder Zhao over mishandling customer funds and transferring it to a European company controlled, allegedly, by Zhao. CBI takes over the Orissa train accident case, files an FIR. A 10-member team begins its probe at the accident site. Railway officials have not ruled out a possible sabotage behind the tragic accident that killed 288 people. Honda marks its re-entry into the SUV space with the global debut of the Elevate in India. Bookings begin next month. The company is yet to reveal the pricing. Well, straight to the market action. The Sensex and the Nifty managing to recoup losses in late trade, ending the day flat. The mid-cap index saw marginal gains, ending in the green for the 12th straight session. IT stocks saw sharp cuts today. This after US software company EPAM trimmed its growth outlook. With all the IT bigwigs facing selling pressure, the IT index lost nearly 2%. But the big market voice this evening, Morgan Stanley's Rhythm Desai, says foreign investors are showing, and I quote, unprecedented levels of interest in India. Speaking to CNBC-TV18, Desai said he expects the rural economy to recover in 3 months, adding that it is inevitable that the rural India story will start to flourish soon.
I think in 3 months from now, you should see pretty good signs of a rural recovery. So the seeds have been sown. Coming out of COVID, rural India actually took it on the chin. Urban had led the recovery, and now it's spreading to rural India. It's inevitable that rural India starts flourishing. So I am actually quite constructive on rural India, and in fact, in our recommended portfolio of stocks, we have a lot of rural players in there because we think that they should do quite well over the next 12 to 24 months.
Constructive on India. That's Morgan Stanley's Rhythm Desai. The big story this evening, India's defence sector set to receive a big boost during Prime Minister Modi's trip to the US that's scheduled later this month. The Biden administration has given permission to General Electric to co-produce fighter jet engines in India in partnership with Hindustan Aeronautics. With the in-principle approval in place, final modalities are being worked out. Parikshit Luthra standing by with more details. Parikshit, significant boost to the defence sector. Take us through the contours of this deal, which is in the making.
Well, yes, this will be a mega defense deal that will be announced when Prime Minister Modi visits the United States for a state visit. And this kind of collaboration is really unprecedented because this kind of a technology transfer has not happened between US and any ally for that matter. So having said that, an in-principle agreement has been reached by both sides. What is significant to note that in 2012, GE and HAL had signed an agreement on collaborating and co-producing jet engines. But the government was not happy with the terms of the agreement, especially related to technology transfer. We wanted greater technology transfer. We now are given to believe by our sources that the terms are now agreeable to the Indian government, and this deal is much better than what had been agreed upon in 2012, and a substantial amount of technology transfer will happen to HAL. When it comes to the site for engine manufacturing, well, an engine unit is already functional in Koraput, Odisha by HAL, and it is possible that this could be one of the locations for co-production. The technology transfer is likely to happen in phases according to reports, and the modalities of the agreements, the payments, the timings of transfer, all of that are being worked on. We believe that the Indian private sector, especially the MSMEs, will significantly gain from it. According to sources, at least 600 MSMEs could benefit from orders that HAL could give as a result of this deal.
All right, Parikshit. Well, we will be watching this space very closely. Appreciate you joining us. Perhaps we will hear more on this when the Prime Minister visits the US, as Parikshit was pointing out. Germany and India are also closing in on a deal to build diesel submarines for India. According to a Bloomberg report, ThyssenKrupp AG's marine arm and Mazagon Dock shipbuilders are looking to jointly bid for an estimated $5.2 billion project to build 6 submarines for the Indian Navy. Now, India's internet economy is projected to grow 6-fold and is set to reach around $1 trillion by 2030. That's as per a joint report by Google, Temasek, Bain & Company. India's B2C commerce segment, along with SaaS and online travel, will be the leading sectors that will drive growth. I caught up with the top executives of the companies on the need for cybersecurity and the key growth drivers that will help India achieve that $1 trillion target by 2030.
Consumers in tier 3, tier 4 towns is as adaptable, as keen to really get on to digital. One. Second, we think of digital economy through startups. But you find in India, both large and small traditional businesses are really investing deeply and powering the digital economy forward. And third, the leap from UPI to ONDC. So I think all these 3 fundamental shifts, in my mind, is what stands out. So therefore, we feel very confident, and I feel personally very confident, that we are ready for the big leap as India in getting to a $1 trillion digital economy.
There are sectors in here which absolutely have a significant export potential. So SaaS, for example, is one of them. It clearly, even today, is a very significant export-led opportunity. We think that that is absolutely going to grow very fast, and it'll remain export-led.
Across our portfolio, across the ecosystem, we are seeing a lot of M&A opportunities. So, the strong players are acquiring the weak. We're very, very focused on technology, on the consumer space. Within that, we have made a lot of investments on D2C models. Yeah. We have made a lot of investments in health, wellness, in fintech, in healthcare delivery. So I think we will continue to see opportunities across the spectrum.
And you can catch the entire conversation on our special show at 9:30 p.m. right here on CNBC-TV18. Crisis-hit edtech company Byju has filed a lawsuit against the lenders of its $1.2 billion term loan B in New York. The company has accused Redwood Capital, and I quote, of predatory tactics, and has issued a notice to disqualify it as a lender. Now, Byju has also chosen not to make any payments, including interest payments, until the case is resolved. Ritu joins us now with the details. Ritu, interesting and unusual, Byju's taking its lender to court and deciding not to pay.
Well, Byju has said it has filed a complaint in the New York Supreme Court to challenge the acceleration of a $1.2 billion term loan, and it also seeks to disqualify Redwood, which is its creditor and an investment management firm. Now, Byju says it was forced to take these measures following a series of what it terms predatory tactics by the lenders led by Redwood. It says that earlier in March, its lenders, and I quote, unlawfully accelerated the term loan on account of certain alleged non-monetary and technical defaults, and Byju's claims that lenders undertook unwarranted enforcement measures, including taking control of Byju's Alpha, appointing their own management, and then they even attempted to deprive Byju's of its contractual right to disqualify lenders in a Delaware court, which the court rejected. Now, at the same time, Byju's alleged that Redwood purchased a significant portfolio of its loan while primarily trading in distressed debt with the intent of making windfall gains, and so it had to issue a notice to the Redwood entities disqualifying them. Once such disqualification takes effect, Redwood will be restrained from exercising critical rights under the term loan. Now, Byju's claims that so far it has demonstrated remarkable restraint by refraining from utilizing the disqualification clause and instead striving for months to achieve an amicable resolution with the lenders. But now, with legal proceedings afoot, the company says it cannot be expected to, and it has elected not to make any further payment to lenders until the dispute is settled by the courts. It even claimed it was financially robust and ready to pay and work with the lenders if they withdrew these actions. Now, this move to disqualify a lender, take action against it, these developments are as important as they are interesting, because while they may not be uncommon in the US, for India, this is going to set a precedent for future cases to come.
All right, Ritu, we'll be watching this closely. Thanks very much. Now, venture capital firm Sequoia has announced that it is splitting into 3 entities. The US, China and India businesses will operate independently. India and South Asia arms have been rebranded as Peak 15 Partners. The firm will continue to manage $9.2 billion across 13 funds and will invest in startups using the $2.5 billion of uninvested capital that remains in Sequoia's corpus. Sequoia hopes to complete the separation by March of 2024. The Aditya Birla Group has entered the branded jewellery retail business with a new venture called Novel Jewels. The group has announced large format stores across India for an investment of 5,000 crores. This is their 3rd major foray into a new business in the last 2 years. Shilpa joins us with the details. Shilpa, the Aditya Birla Group expanding its footprint in the fashion and lifestyle space. Tell us more about the group's blueprint.
Well, the Aditya Birla Group has been making massive strides expanding its footprint, especially in the lifestyle consumer space. Now, the latest foray is into branded jewellery retail. Now, the group has announced that it will invest 5,000 crores into this business, which will be housed under a new venture that's called Novel Jewels. And this business will build large format exclusive jewellery retail stores with in-house brands. Now, India's jewellery market, if you see, is one that's been growing rapidly. In fact, it's projected to hit about $90 billion by 2025. And with this foray, Aditya Birla takes on Titan's Tanishq, which is a market leader in this space, along with other players like Malabar Gold and Diamonds, Joya Lucas, and Kalyan Jewellers as well. Other players also include Reliance Jewels as well. Now, analysts are of the view that a 5,000 crore investment gives Aditya Birla the potential to build about 150 to 200 stores. But given the factor of trust, brand creation in jewellery takes much longer than other discretionary categories, and so they say that it is too soon to call out any competitive impact. But that's about Aditya Birla's new business. If you zoom out a bit and see, apart from paints, within the consumer lifestyle space, there's been a lot of action in the recent past. It recently forayed into premium casual dining restaurant chains, and its fashion and retail business has been expanding aggressively. It acquired the rights for Reebok in 2022. It launched a D2C platform called Tomorrow and invested in 7 digital brands last year. And most importantly, its big bet on the ethnic and occasion wear. Remember, it most recently acquired a 51% stake in TCNS for about 1650 crores earlier this year. And in the past 2 to 3 years, it has invested in several luxury premium designers like Sabyasachi, Masaba, Tarun Tahiliani, among others. So investments, acquisitions, new business launches, the Aditya Birla Group seems to be keen on becoming a formidable player across the lifestyle and fashion space.
All right, Shilpa, many thanks for joining us. Now, the government is set to garner more than 70,000 crore rupees as dividend from public sector units for FY23. Sources say dividends from PSU banks up nearly 30% to 12,000 crores, with SBI accounting for the lion's share of the proceeds. 45 to 50% of dividend income for government comes from SBI alone at 5,500 crore rupees, which is up 52% compared to to last fiscal. The Adani Group has repaid loans of $2.65 billion that were taken by pledging shares in the conglomerate's listed firms. In its credit note, the group also said it's repaid another $700 million in loans taken for the acquisition of Ambuja Cement. Further, the credit update states that the promoters have completed the sale of shares in 4 listed group entities to GQG Partners for $1.87 billion. The US market regulator has sued Coinbase a day after suing Binance, the world's largest cryptocurrency exchange. Binance and its founder Zhao have been named. The SEC alleges that the company was operating as an unregistered exchange and broker, and that 13 assets listed on its platform were considered crypto asset securities. Ukraine has accused Russian forces of blowing up a strategically important dam in Kherson, which supplies water to a nuclear plant in the Russian-occupied Crimean Peninsula. Emergency evacuations have begun as the war zone faces flooding risk, while Ukraine and its Western allies accuse Russia of indulging in war crime. The Kremlin accuses Kyiv of deliberately sabotaging the dam. Stefan Korshak, a journalist with Kyiv Post, told CNBC-TV18 that close to 10,000 people could be potentially displaced due to the dam being blown up.
Those people living in the floodplain are impacted directly and seriously. I'm seeing reports of flood rise up to 5 meters above normal levels. So there are thousands of people that are needing evacuation. So far, no reports of casualties, either injured or dead. But the territory covered is big. Thousands of people, potentially tens of thousands of people displaced.
Significant development there in the Russia-Ukraine war. Many experts suggest that this could be a big turning point. Time for us to head into a short break, but up next, Apple enters the metaverse, launches a mixed reality headset, marking its first major product launch in 9 years. That and more when we return.
Just cut the crap, man.
The surprisingly spacious MG Comet EV, the no-nonsense car.
Apple has officially entered the metaverse. The tech giant unveiled its much-awaited augmented reality headset, the Vision Pro, at its developers conference last evening. Priced at $3,499, the headset marks Apple's first major product launch since 2014. CEO Tim Cook claims the Vision Pro is the first Apple product that you look through and not at. The device can be controlled using the wearer's eyes, hands and voice. The Vision Pro will hit shelves next year. The tech giant also unveiled what it claims to be the world's slimmest 15-inch laptop. Shibani Garrett gets us the action from the Apple headquarters in California.
Apple's much-awaited Worldwide Developers Conference began last night with the tech giant announcing some cool new devices and features. The Cupertino-based iPhone maker announced its first new category launch since 2015 when they launched the Apple Watch, which was their first wearable. And this one is called the Vision Pro. It's a mixed reality headset which looks right out of the future. Priced at $3,500, it's at least a year away from launch, but has already generated a lot of waves online. It's a product that CEO Tim Cook described as the first Apple product you look through and not look at.
I believe that augmented reality is a profound technology. Blending digital content with the real world can unlock experiences like nothing we've ever seen. So today, I'm excited to announce an entirely new AR platform with a revolutionary new product.
Controlled by users' eyes, hands and voice. The Vision Pro also features an ultra-high-resolution display system that packs 23 million pixels across its 2 displays. These groundbreaking innovations are in fact powered by Apple Silicon in a unique dual-chip format. M2 along with a brand new R1 chip processes inputs from 12 cameras, 5 sensors and 6 microphones to ensure that content feels like it's appearing right in front of the user's eyes in real time.
Well, that's what's new from Apple, but from one tech giant to another, Samsung has unveiled the Galaxy F54 with the 30,000 rupee price tag. Samsung is hoping to take on Chinese phone makers in the affordable premium segment. But while Samsung may be hoping to drive volumes, it comes at a time when demand for smartphones is at a multi-year low. My colleague Ashmit Kumar spoke with Samsung's management on the new product and demand visibility.
Well, I come to you from the launch of Samsung Galaxy F54. Samsung is very clear. It's taking a name at Gen Z. It's loading the product with a lot of impressive features, strong camera, good battery life. But what this clearly is an attempt by Samsung to future-proof its demand pipeline. Now, why do I say that? Keep in mind that Samsung has retained the leadership position in terms of the market for smartphones for Q4 of 2022 as well as Q1 of 2023. Now, what's important is that Samsung hopes that the products such as these will drive volumes for them and will help them maintain that leadership position. What will make this battle interesting, though, is that the pricing of the product is such, priced at 29,999. It's bang in the middle of the affordable premium segment, a segment which so far has been dominated by Chinese players, the likes of Vivo. So an interesting battle ahead for Samsung.
We don't look at this segment as a segment in which there is competition. We look at this segment where consumers can truly upgrade from the below 15,000 to the more than 15,000 segment. And that's where this comes from. We're very confident that with F54 5G, which is our premium F-series phone, we'll be able to consolidate our leadership in the quarters to come.
But this launch by Samsung comes at an interesting time. On one hand, Samsung clearly leads the charge for 5G shipments. Data reveals that for the month of April 2023, Samsung accounted for 28% of all 5G smartphones. That's on one hand. On the other hand, overall demand seems to be ebbing. Q1, Jan to March quarter of 2023 reveals that the overall shipments of smartphones dropped by as much as 16% year on year. And in fact, the overall shipments for last year, which is 2022, that fell by 10% YOY.
Quarter one shipments, as per reports, as per industry reports, has not been very healthy. But I'm happy to state that in quarter one we have grown at very strong double digits, which is also the reason why it's the second quarter, quarter four last year, which is the October to December quarter. We were the number one brand. In Jan to March quarter as well, we continue to be number one brand.
Well, Samsung for now seems to have bucked the trend in terms of the muted demand seen for overall shipments, with Samsung registering strong growth. But going forward, if Samsung is to maintain that leadership position, then demand from the Gen Z segment for devices such as the F54 will be crucial. In New Delhi, Ashmit Kumar.
In other news, CBI has taken over the Orissa train accident case. A 10-member team has begun its probe at the accident site. However, railway officials have not ruled out possible sabotage behind the tragic accident that's now killed 288 people and injured 900. Japanese auto giant Honda Cars India has revealed what is coming up is its mid-size SUV Elevate. Well, this is a global debut for the car. Danish Anand reports that the company's first all-new car launch in 6 years is hoping to capture significant market share in what is easily India's most competitive segment. Take a look.
Honda Cars India once ruled Indian roads with globally recognized models like the City and the Civic, but its drive over the last few years has been a rough one. Its resistance to diesel engines combined with other factors pushed its market share to 2.3%. But Honda Cars India is revving up to drive back into the big league in style. This is the ride it is banking on. The Elevate, which made its global debut in India, is its latest SUV offering and should hit Indian roads later this year.
Definitely we like to be in the SUV growing segment. That is how the Elevate is being designed. So we have done a lot of extensive surveys in the market and what people they actually want from their SUV. What do they expect Honda to make an SUV like? So with all that survey knowledge, we have made and designed this car specifically for Indian market. And as you said, this is a global model, but India is a lead country.
This will be the first of 5 SUVs Honda plans to launch by 2030. Honda has high hopes from Elevate, and the company feels that this car could be the third pillar for volume generation in India, but the company's plan doesn't stop here, as the company is looking forward to make India an important hub for exporting Elevate to other markets across the world. Honda is expected to announce the pricing for the Elevate by August, and the mid-size SUV will take on Hyundai's Creta, Kia Seltos, Volkswagen Tiguan, Maruti Suzuki's Grand Vitara, and MG's Aster. Honda is busy ramping up capacity at its Rajasthan plant to make room for the Elevate.
Currently, the Tapukara plant has a plant capacity of about 180,000 units. And yes, to prepare for Elevate, we've been increasing and ramping up our production. So we have a capacity we are producing about 540 cars per day till last year. Now this has been actually increased, so 620 cars.
The Rajasthan plant will also manufacture the other new launches that Honda Cars India has planned, including an electric version of the Elevate down the road. Bookings for Elevate are all set to open from July, and the car is expected to be launched in the festive season. But the company's plans for the future in India and globally are big, as by 2030, at least 3 electric SUVs will be launched by Honda, and by 2030, the company is planning to launch 5 new SUVs in India. With video journalist Saurabh Chauhan, this is Danish Anand for CNBC-TV18.
And that's a wrap on this edition of India Business Hour. Thanks very much for watching. Do stay tuned. The news continues on CNBC-TV18.